Hey everybody, welcome back. Welcome back to another news update for you guys today. Another news update. No shootings or chaos for today, at least right now. But we got an update coming here in the next 5 minutes-ish on whether or not interest rates will be lowered in the Fed. So what to watch in the Fed meeting. And then we're also going to have Jerome Powell make remarks afterwards. Let me pull that up here. It should be, I think it's already scheduled. Federal Reserve. Here you go. Yeah. So you got 2:30 p.m. We're gonna have an announcement. We got waiting music. It's like you're on the phone waiting for some help. You know what I mean? You're like got the worst case scenario happening possible, and then you're like waiting, and then they got this music playing. It's just like the best thing ever. So that's going on. After a long pause, the Federal Reserve is finally ready to make a move. On Wednesday, policymakers are expected to vote to lower interest rates 0.25 percentage point, which is going to be the first cut since December. The decision is a turning point for the central bank, whose officials have been locked in an intense debate about the right time to provide some relief to borrowers when the economy has been sending mixed signals. I wonder why. It has been. Could it be the tariffs? The tariffs. The Fed will release a new policy statement alongside its rate decision at 2 p.m. in Washington. So that's again in like 4 minutes. It will also release new projections compiling officials' views on interest rates and the economic outlook. Jerome Powell, the Fed chair, will hold a news conference, which that is what that is going to be there. So some updates. So anyways, if you lower the interest rate, the inflation rises. And that's the concern, right? We had Biden and you had people crying about inflation, which rightfully so, but then Biden brought the inflation down, but didn't get credit for any of it. Well, you lower the interest rates. It's good, but not good. It can be good, but also not good. And there's like smart economic people that will be doing most of the talking for this, because I am not educated enough to give analysis on the state of the economy. So I'm just going to tell you guys what happens. And I know that lowering the interest rate will increase the inflation rate. And that is also a concern with the tariffs that Trump has demanded be the focal point of our economy. So we're just going to get into all the latest and give you guys all of the updates as they come in. So we got markets have barely budged over the last hour. Stocks are still down, but only by a little. And government bonds yields are up, but not by much. That could shift once we get the Fed's rate decision, economic projections in a few minutes. Okay, so I don't know if it's going to be like a post or if they're going to, it's going to be an announcement. It will be an announcement. Check into the stream, you guys. Kash Patel's lying on Capitol Hill today. Yeah, I've seen some of the clips. I got my phone back. I had to work that out this morning. It was already too late. I got my phone back, though. I had to work with the people to get that back, and then by the time I got it done, I'm like, well, we got the Fed decision. So, I mean, yeah, Kash Patel's been on the Hill, and I've been aware of that. I woke up enough for it, but I got my phone back. I needed my phone. Okay, mystery elevator. Consumers have remained relatively insulated from price increases caused by Trump's tariffs, but companies are now starting to pass the costs. For example, coffee prices have jumped nearly 21% from last year, the largest increase since the 90s, at least in part because of the steep tariffs on Brazil and Vietnam. One thing the Fed is watching for is whether the tariffs cause a one-time spike in prices or if the increases are more sustained. Do we ever have one-time spikes in prices for anything? They usually stay there. I mean, there's no incentive to lower the prices back down, other than if the government demands it. One bright spot in the economy that could mute fears about a broader economic downturn has been consumer spending. Retail sales rose sharply in August, according to data that the Commerce Department released Tuesday. Spending has largely held up even though as prices on a wide range of goods and services have risen because of tariffs. So you got prices are going up even though the cost of things are going up. That could be why. And things cost more. So does it give off that, it looks like people are spending more because the costs are going up? I don't know. I'll be watching what the Fed says about the impact of tariffs on inflation and economic activity. That's going to be basically what is the most important part of this. Obviously, I mean, lowering the interest rate is like an immediate, like not bad, but it's the long term that's the concern with inflation. And that was, I guess, one of the reasons why Biden was a bad president to the MAGA was the inflation, but they didn't attribute any of the reasons why we had high inflation post-COVID. COVID caused the inflation, but Biden got the blame for it. He lowered the inflation rate, was down significantly. What is this?
Hi, I'm Ian, and I work for the Federal Reserve, the central bank of the United States. The Federal Reserve System consists of three main entities that perform key functions that serve the public and promote the health of our economy and the stability of our financial system. These key entities are the Federal Reserve Board of Governors, 12 Federal Reserve banks operating around our nation, and the Federal Open Market Committee. Based in Washington, D.C., the Board of Governors is the governing body of the Federal Reserve System. It's an agency of the federal government that reports to and is directly accountable to Congress. The board consists of 7 members, or governors, who are nominated by the President of the United States and confirmed by the Senate. Governors are appointed for 14-year terms. The Board of Governors oversees and sets policy direction for the system, including 12 Federal Reserve banks located around the country, which take the pulse of the nation's economic health from a regional perspective. The 12 reserve banks represent different geographic regions, or districts, and were set up based on regional economic considerations. Although supervised by the Federal Reserve Board, the reserve banks operate independently in many respects. The reserve banks carry out a number of core system functions, such as supervising and examining commercial banks and other financial institutions, enforcing compliance with federal consumer protection and fair lending laws, while promoting local community development and lending to depository institutions to ensure crucial liquidity in the financial system. They and the board also play a key role in another primary Fed function, fostering the safety and efficiency of our nation's payment systems, including distributing currency and coins to banks, operating electronic payment systems, and clearing our checks. In addition, the reserve banks act as the government's bank, providing services such as maintaining the Treasury Department's transaction account and issuing and redeeming U.S. government securities. They also act as a bank for banks by providing key financial services to banks, thrifts, and credit unions. The reserve banks also provide a wealth of information on conditions across the nation, information that is vital to formulating a national monetary policy that helps maintain a healthy U.S. economy and a stable financial system. The board and the reserve banks together help ensure that consumer and community voices are heard at the central bank through consumer-focused outreach, research, and analysis. This helps keep the Federal Reserve's actions, policies, and decision-making attuned to what's going on in American households, communities, and businesses, which are the foundation of our economy. The third key Fed entity is the Federal Open Market Committee, or FOMC, which brings together representatives from the board and the reserve banks to consider the state of the U.S. economy and set a course for our monetary policy in a manner that seeks to promote an economy that works for all Americans. The 12-member FOMC establishes an appropriate position or stance for monetary policy to help move the economy towards 2 essential mandates set for the Fed by Congress, promoting maximum employment and price stability. This occurs mainly through the FOMC's influence on interest rates and credit conditions, which can significantly impact financial conditions, including economic productivity and even spending and investment decisions by households, communities, and businesses. Working together, these 3 key Fed entities and the unique Federal Reserve System structure established by Congress more than a century ago help promote conditions resulting in a strong, healthy, and sustainable economy. For more information on how the Fed functions, visit federalreserve.gov and click on About the Fed.
That was cute. Well, that was adorable. Okay, well, that taught you a little bit about the Fed. Now we have a pop quiz. How many governors are on the board? And how long is their term? Fuck. I hated that so bad when teachers would do that. That was the absolute fucking worst way to teach, I think. Like, bro, I didn't even hear half of that. I don't know if you guys got it. According to the projections, officials see their 2 goals of low, stable inflation and a healthy labor market staying in tension with one another. Most policymakers forecast growth of about 1.6% this year, slightly higher than June's estimate. They see the unemployment rate to rising 4.5% from its current level of 4.3% before declining after that point. Officials had held steady their forecast for inflation for this year, with the core measure, which strips out volatile food and energy items, rising 3.1%. But they became less optimistic about how much it would decline in 2026 than 3 months ago. Now they have it settling at 2.6% by the end of the year. Only in 2028 do they have inflation returning. Oh, weird. Then they could blame it on Democrat when Democrats win. In its policy statement, the Fed acknowledged that its views on the labor market had changed, that policymakers now judge that the downside risks to employment have risen. I'm waiting for the announcement. Updated just now, so they did lower it. What to know about the Fed meeting? The Federal Reserve lowered interest rates by 1/4 of a percentage point on Wednesday as officials signaled 2 more cuts, so it has been lowered. 2 more cuts could follow this year in light of rising risks of confronting the labor market. Well, MAGA's getting people fired left and right for sharing their opinion of Charlie Kirk. Thank you, Amonsky, for the 5 gifted. So Trump's been firing people for DEI, and if you're not white, you're getting fired. You've had inflation destroying small businesses, and now you're getting people mass fired for posting about Charlie Kirk. So the labor issues are probably going to increase as they tighten who can work and who can say things, and we really go into Orwell world here with MAGA. And I'm just, it's gonna all come to a head at some point. The decision to lower borrowing costs for the first time since December shifts interest rates to a range of 4% to 4.25%. The decision was not unanimously supported, the second straight meeting that featured at least one dissent from a member of the Board of Governors. Stephen Miran, President Trump's pick to join the Fed, who was sworn in just minutes before the start of the central bank's 2-day meeting on Tuesday, voted in favor of a 0.5-point reduction. The decision to cut marks a turning point for the central bank, whose officials have been locked in an intense debate about the right time to provide some relief to borrowers when its goals of low, stable inflation and a healthy labor market are in tension with one another. Inflation picked back up over the summer and appears poised to continue accelerating this year as a result of Trump's tariffs. The labor market, while still solid, has started to flash more ominous signs. Things aren't going well. Trump's economy is dog shit. These tariffs are dog shit. Only anyone signaled that these would be a bad idea. Only anyone and everyone did. Only cultists said the tariffs are good. Tariff good. Even Trump's biggest fans were still like, I don't know, Trump. I don't know you should do those. That seems like a bad idea. Did them anyways. Really, it's just so that way they can funnel more money into his businesses and his friends, and then kill off small businesses in the country. So that way then more stock can go to Bezos in Amazon, because regular Americans can't afford the import costs. Inflation's picked back up over the summer and appears poised to continue accelerating this year as a result of Mr. Trump's tariffs. The labor market was so solid, it started to flash more ominous signs. Job growths have sharply slowed, with monthly gains averaging just 29,000 over the 3-month period ending in August. In May, the average stood around 130,000 positions, while consumers are still spending and the unemployment rate remains stable at 4.3%. Sluggish hiring has raised concerns that the labor market is now much more vulnerable than earlier this year. In its policy statement, the Fed acknowledged that its views on the labor market had changed, saying that the policymakers now judge that the downside risks to employment have risen. Against this backdrop, new projections released on Wednesday show that most officials expect another 0.5 percentage point reduction in interest rates this year, which would bring borrowing costs to a range of 3.5% to 3.75%. There are 2 more meetings left this year, scheduled for October and December. That is a more substantive decline than what officials estimated in June. Still, 7 of the 19 policymakers penciled in fewer cuts this year, suggesting the forthcoming decisions could be divisive. The dot plot tracking individual officials' views on interest rates had notable entries for 2025 in what it is considered a soft descent, One policymaker signaled support for interest rates to have stayed at the previous level of 4.25% to 4.5% this year. On the other extreme, one policymaker penciled in a steep drop in interest rates by the end of the year to range of 2.75% to 3%. While the forecasts are anonymous, that is likely to have been Mr. Merriam's estimate. Okay. So they have been lowered by 1/4 of a percentage point. Okay. So it's about long term and short term. This will help in the short term immediately, but in the long term, it's going to be fucked. Okay. Long term versus short term, basically. Do we get any posts? No post updates regarding this. This is crazy. Dollar hitting new low. I know this might be, you know what? I don't even care. This might be more boring news today. I don't care. I need a break from chaos and gun violence. Okay? And pedophiles. I need a break. And this is important too, because this is our economy. Hello, Adam. Hello, hello. Hello, hello, hello. So far, what we know is the interest rate has been lowered by 1/4. 1/4 of a percentage point on Wednesday. So no ARMA tonight. I mean, probably arena breakout. The immediate reaction to markets has been fairly muted, suggesting that the Fed's rate decision and forecasts were broadly in line with the investors' expectations. Stocks have nudged higher and bond yields have nudged lower, but the moves are small. Fed officials predict that the unemployment rate could rise to 4.5% by the end of the year, above the current 4.3%. That prediction is in line with their forecast in June. So the unemployment rate is rising. Solid. And it's going to rise as more people lose their jobs for posting how they feel about things. We predicted this. What was the unemployment rate under Biden? Good time to invest in, or I guess the time to invest in gold was a while ago. Gold. We got 2 more rate cuts coming this year, Polymarket predicts. It's a betting site, though. It's on a news site. You got Trump in the UK today. All of those laid off federal employees have to go find jobs now. LMAO. Keep that energy. That's MAGA. They really think that like is not like, oh, they lost their job, haha. They lost their jobs because of DEI and Charlie Kirk truth. They said something about Charlie Kirk and I don't like it. Make them lose their job. And then we have a rising jobs issue. Well, it's because of Biden. Biden did it. We're still in the waiting room, so we're going to keep that down just a little bit. We do have a press conference coming up about it. Representative Brendan Boyle of Pennsylvania, the top Democrat on the House Budget Committee, said that the rate cut was a sign that the Trump economy is not doing well and warned that stagflation is coming. The Fed isn't cutting rates because the economy is strong, Mr. Boyle said in the statement. It's cutting them because Donald Trump is recklessly sabotaging it. Oh, now it could go up to 4.6% unemployment. Higher than, dang. When Biden took office, it was at 6% because of COVID. Biden got it down to 3.6% at its lowest. 3.4% in 2023. It got up to 4% last year. So you're having, and then they're coping. You're having rising unemployment under Trump, which why does Trump get a pass with this? Biden got shit on for COVID numbers and Trump's economy and that he had to inherit. Kind of similar to like Obama when he inherited Bush's economy. And then Donald Trump destroys everything and shits on everything that's happening and makes a worse situation than we had. And then because there's improvements, like slight improvements in his dog shit, then we have to give him credit for it? For what? Why don't you just continue what Biden had and then claim it? And why does he always just claim what Biden and he did it? Could have taken exactly Biden's economy and then say, that's my economy, like he does with everything else. But no, he had to do his fucking tariffs because he's just trying to destroy the country. That's what it is. He doesn't care about our country. Trump doesn't care about the American people. Doesn't care about our systems and our economy. Actually, he doesn't care about none of that. He just cares about his billionaire friends and himself and how much money they can suck out of us. Stagflation, low growth, high unemployment, and high interest rates. If you don't know what it is, 1980, 22% interest rates. That will happen eventually. You said Kash Patel testifying right now? Yep. He said the Fed is independent? Yeah, until Trump threatens them and starts bullying them. And pressures them and uses like mob tactics on them. They're independent until that for sure. You want to buy those Brits who did the projections of Trump and Epstein some beers? You mean a pint? Yeah, they had Trump and Epstein up on the wall together. Vance on Trump strikes on boats.
So I was talking to I said Secretary of Defense, but our new Secretary of War, Pete Hegseth. And I was talking to Secretary Hegseth, and you know what he said? He said, you know what, Mr. Vice President? We don't see any of these drug boats coming into our country. They've completely stopped. And I said, I know why. I would stop too. Hell, I wouldn't go fishing right now in that area of the world. But that is what a military that is dedicated to its purpose and a commander-in-chief that is dedicated to the national good can do.
Blasting fishing boats and boats that you haven't identified as drug trafficking and just taking them out, I guess. I guess. The median age for CNN's audience is currently 67, making it the youngest among... Oh, no way. That's bad. I mean, the only reason we would is like the clips, and if they have like a person on, there's literally zero reason to watch mainstream media programming. I can't stand it when it gets shared into my community. But like, did you see the latest MSNBC? Like, brother, no, that's corporate media. I don't. Or like when old corporate media figures now become independent. Stop. They're not independent. They were part of the industry and they're still a part of it low key. The only ones that are truly independent are people that have zero connection to the industry. Got a whole bunch of people like that now. They lost their mainstream media job and they're out here acting like they're independent news. Absolutely not. Absolutely not. And I'm in, like, by the time I'm 60s, there will be no mainstream corporate media anymore. It'll be all like everyone, regulars will just have news. Anyways, we're waiting for the press conference now with Jerome Powell on lowering the rate by 1/4%.
Remembering your oath to tell the truth, did you ever tell Donald Trump his name is in the files?
I have never spoken to President Trump about the Epstein files.
Did you ever tell the Attorney General that Donald Trump's name is in the Epstein files?
The Attorney General and I have had numerous discussions about the entirety of the Epstein files and the reviews conducted by our team.
Did you tell the Attorney General that Donald Trump's name is in the Epstein files?
And we have released where President Trump's name is in the Attorney's files.
It's a simple question. Did you tell the Attorney General that the President's name is in the Epstein files?
During many conversations that the Attorney General and I have had on the matter of Epstein, we have reviewed.
The question is simple. Did you tell the Attorney General that Donald Trump's name is in the Epstein files? Yes or no?
Why don't you try spelling it out?
Yes or no?
What a clown. What an absolute stain.
Use the alphabet.
Yes or no?
No. A, B, C,
Director,
D, E, F.
it sounds like you don't want to tell us. Did you tell
That's our FBI director, yo. FBI.
the Attorney General that Donald Trump's name was in the Epstein files?
Why don't you try serving your
Director,
constituency by focusing on reducing violent crime in this country and the number of pedophiles that are illegally...
Reducing violent crime in this country? You are the FBI director. What the fuck are you talking about? You are the one that is in charge of the entity that is powered by the federal government to find criminals. What are you talking about?
Harbored in your sanctuary cities in California. I'll work with you on that.
Regular order, Mr. Chairman.
Director,
Do you want to work with us on that after I just came at your life? What a clown, man.
From California.
Did you tell the Attorney General that Donald Trump's name is in the Epstein files?
Question has been asked and answered.
It hasn't, though.
You've not answered it, and we will take your evasiveness as a consciousness of guilt.
Oof. Help! Help. Confusing moment at Kash Patel hearing.
Under your leadership, would you please respond to these questions, and can you commit to doing that?
As soon as the trial's over.
Thank you very much. I will end with this.
As soon as the trial is over? What? You mean the investigation? So weird stuff happening. Trump is more than a king. He is the daddy of the Western world. Now we know where that daddy term came from. It came from even the Russians. And you had, remember you guys, you had MAGA calling Trump daddy at the start of the year and shit. Russians own MAGA, by the way. They're in a cult, but the Russians own it. It's a Russian cult, but is what it is. Russians were like, we're gonna turn the very people that helped tear down our wall and make them support what we want now. Masterful gambit, and it worked. And it works. It works. Not worked. It's not done. It works. Active working. Incredible propaganda, to be honest. This guy's paid by him. The FCC chairman is threatening immediate action against Jimmy Kimmel, ABC, and Disney for deliberately misleading the public by claiming Charlie Kirk's assassin was a MAGA conservative.
You know, when you look at the conduct that has taken place by Jimmy Kimmel, it appears to be some of the sickest conduct possible.
They are done. We're in a bad place because this is the right wing all day long on everything, every single story ever that happens ever, and I cover breaking news on this channel, and every time I have to like look at my chat and it's the most cooked comments, not from my regulars, not from my members, but I'm talking like the Democrats did the weather machine, they sent the wildfire to California, they did it. Every single mass shooting. Was this a trans? This is the trans that did it. Only every time. Only every single news story. I mean, not like one or two of them, like every single one.
It appears to be some of the sickest conduct possible.
What did Jimmy Kimmel say? We hate free speech now, MAGA. Free speech is bad. Look at me. We're the woke. We're the libtards now. Hey. Remember that lib shit we hated? Well, well, we're that now, and we're better. We did it, and now we're doing it better than they did. Better than they ever could have. We just pretended we didn't like it. Where's the one where he isn't his oh. Damn it, dude. Hold on. I'm gonna switch over to my other one. There's no ads. There better not be any ads, is it? Was it last night's? Candace Owens is blaming BB? Of course. Candace Owens is doing a grift for anti-Israel, and it's fine. It's like fine, but like, boy, is she cooking like that? Her focus is anti-Semitism. She puts anti-Zionism there, which is important, obviously, but hers is anti-Semitism. I'm seeing too many people post about Candace Owens lately. Like, stop. Like, just because that she's like a different MAGA, they're still MAGA. Oh, she's a MAGA that can criticize Israel, though. Like, bro, you can, like, is that how desperate it is? There's so many people out here that can criticize Israel. It's not hard. You need a minority that's upholding white supremacy to do it for you. Okay, it's all Candace Owens is for. When does this get started? 3 minutes? So we're almost done listening to this. I wanted to watch this, but watch it afterwards because this is about to start. Oh, you're saying they aren't censoring her because she's a voice for the white supremacy still. That's why. They tolerate her. She's tolerated. Israel's the issue they can, like, excuse if, like, people are against them as long as they're still on the right, because they'll still bring people to their shit at the end of the day. Nobody embraces Israel like the Republican Party, actually. There's Democrats that do, for sure. The party as a whole, though, does not. Israel is like a religious importance to Republicans, and it's connected to their faith. Come on, Fed, lower the price of money in spite of Trump demanding it. We need the rates have been lowered already. We're waiting for the press conference. Powell's press conference will start in, well, now 2 minutes. We're gonna get in 2 minutes. This initial cut will provide relief to small businesses who have been navigating macroeconomic challenge. Yeah, to Trump's tariffs. This will provide relief to businesses who have been navigating economic challenges because of Trump's own actions. And also, Trump demanded these rate cuts, too. Oh, inflation's going back up. Unemployment's going back up. Is this the pain, temporary pain for the gain? And remember, this is direct Trump policies that caused this. Biden, not a single Biden policy caused inflation to go up or unemployment to go up. Not a single one. It was COVID. Biden inherited COVID and brought it down. Russia invaded Ukraine, and the cost of gas went up. Inflation rates did go up after Russia invaded Ukraine because it's connected, and it was cope and seethe. And then afterwards, Biden did nothing but lower the interest rate and inflation rate. Inflation rate. It was at like 3.2% when Biden left office. It was at like 9% in 2022. Bad for sure. It's starting. That was because of COVID and then Russia's invasion of Ukraine. All right, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August.
Nice.
And that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up.
Nice.
In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level.
Think so?
But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed.
That is
our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Key question time.
Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? Yep. And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic?
Good question.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but
Like what kind?
I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply. And to the point where we see what I've called a curious balance. It's, typically when we say things are in balance, that sounds good. But in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things.
Thanks, Biden.
I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address. How do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
Like a follow-up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Take a moment and like and subscribe, you guys.
ABC News.
Hit that like button, subscribe.
The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, and this is quite an unusual situation, how do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
Aren't they both connected?
Are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
I really think Trump's tariffs are meant to destroy the Fed.
Steve Leisman, CNBC. Mr. Chair,
because no matter what they do, we're going to have high inflation, high employment, unemployment,
recalibration,
and then Trump is just going to blame the Fed, obviously.
You pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
Yeah, it is
So
Project 2025.
We're in a meeting by meeting situation. We're going to be
living
looking at the data. You know what? Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching?
They want to end it.
To determine that the Fed
MAGA wants to end the Fed
based on the economic outlook rather than political considerations.
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that's That is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and they're making their arguments, and we're having really a great discussion around these challenging issues. So.
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW,
weird Fox News
the
question
revision that we saw was almost exactly what we
a
expected.
good one.
It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it, but the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month. And you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Literally.
Well, I didn't say that I thought a quarter point would make a huge difference.
It gives Trump a win.
Look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see minority unemployment going up. You see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to to always trying to do better.
Really?
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, I mean, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy
Our
something and you sell it through retail or you use it to make a product,
we're paying it.
Probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing.
Of course, that's what tariffs are.
All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hey, Twitch, start leaving comments quick. They should pop up now. I'm seeing your guys' chat.
With Bloomberg News.
Put a couple comments in. They should pop up on screen now.
On one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret some of his speeches, for example, and then some of, the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really, the only way for any voter to really move things around is to be incredibly persuasive. And the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response?
Who said that? MAGA cult?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything.
I don't trust the Trump administration to give me a glass of water.
We're just going to keep doing our jobs.
You kidding me?
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about on one side?
There'll probably be two more cuts before the end of the year.
And on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well,
Thank you, Allie.
suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think
what up, Terminator Pig?
That's broadly accepted. And so that meant different things for different people. Some some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there's a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole.
Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that. And they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry. And so rates have come down a bit. And as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates. And that has been happening. And that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot, big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas.
You know how expensive it is?
Are very built up, and so you're having to build farther and farther out.
Maybe because houses are like $500,000. You need to be a millionaire to have a house now.
During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times. And as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that. But over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
Well, the rate's been cut, 1/4%. Trump definitely got to him. Trying to ease your concerns with the economy. That's all that was, really. It's bad. It's bad, and it's going to a bad place, but it's his job to get up there and be like, yo, it's not as bad. It could be good. Maybe. But, like, here, all of the things Trump is doing is bad, but, like, not. So that's what we got. So, just to sum it up for you guys, I was posting and doing what I could with all this. Just to keep it simple. So the Fed just cut the interest rates by 1/4%. The good loans and credit cards may get slightly cheaper. Old video. Don't need to watch that. So loans and credit cards may get slightly cheaper. Okay. So if you want to go and put yourself in further debt, you can get a lower interest rate, or credit cards may be cheaper. Yay. And that's the thing what MAGA is focused on. They were mad that their interest rates on their credit cards were so high, because they just go max out their fucking credit cards on money that isn't theirs. I mean, you don't have that credit card ain't no money. I haven't had a credit card in 15, 20 years now. don't think I'll ever get one unless it's like a big giant purchase, like a house or something maybe. Mortgage rates could start easing. Stocks often get a boost when borrowing is cheaper. And then the bad, savings accounts and CDs might pay you less. Mortgage relief will be slow to show up, and cutting too much could risk inflation creeping back, right? And we're expected to have 2 more federal cuts before the end of the year. At least 2 more. At least. So inflation's likely going to rise due to this, which apparently that's why MAGA didn't like Biden. They didn't like him just because he was just Democrat. That's it. They didn't have any actual like justifiable reasons. Old and then Democrat. That's it. At least the Palestine protesters, like they had points to make. The MAGA was just like, he's old and Democrat. That's it. Nothing. And then all their actual criticisms you can fact check and then be like, nope, that's, I don't know where you got that from, but that's a lie. That's a lie. That's a lie. That's feelings, not truth. Most of the time. So that was the latest. Powell's final question was whether the debate over the Fed independence is putting pressure on inflation markets. Today we listened to it all. News conference is over. Each stop represents what one Fed official thinks the midpoint target rate range should be at the end of this year and the next. It fluctuates. Interesting. Okay, that's a wider range of where it could end up. Okay. People at the end of the income spectrum are under pressure, Powell said, but overall households are in good shape. So if you're a lower income, you are under pressure. But if you have a house and you are doing that, then you are okay then for now. That's where we're at. That is where we're at with it. So short-term relief for people that aren't already struggling. And then it could be bad in the long term with the inflation. If you have credit cards and shit. It's like a fix to something that Trump caused himself. A quick fix for something that wasn't a problem until Trump introduced tariffs. And that's where we're at with it. Then you got Republicans doing racism posts today. In my country, I'm forced to keep my mouth shut. Nancy Mace, you never keep your mouth shut. That thing is permanently opened. Michael Knowles says turning point event at the... Oh, by the way, you got Ben Shapiro's Daily Wire took over Turning Point USA. That's going to destroy it too, which is fine. Good. Turning Point USA is garbage. All these new chapters that are being started and all the people putting money into it, it's going to be for nothing. Because you got Ben fucking Shapiro that's going to be running it. And you're going to have issues with the anti-Semitics and the anti-Zionists in the right. That's going to be a problem. And I'm going to just be like, oh, perfect. You couldn't have picked a more worse person to take over your Turning Point USA shit than Ben Shapiro. They're going to have drama about Israel the whole time. And people literally believe that Israel was the one responsible for killing Charlie Kirk. And now you're about to have all hail Israel, Ben Shapiro running the Turning Point. I love that. I love all of that. Destroy it, please. They destroy it themselves. Let's check out Jimmy Kimmel. Made him really mad. Jimmy Kimmel made MAGA really mad. You got all of them crying, as usual. I gotta find the video. They've been all... They just tweet, brother. Sponsors of Jimmy Kimmel. Impossible. Milo is no business calling anything gay. Have you ever listened to Milo for like 3 seconds? It's crazy how Milo's having a comeback. How long ago was the Jimmy Kimmel clip? They're literally crying over it still. There it is. Jimmy Kimmel lied to his audience. This went viral by claiming Charlie Kirk's assassin is MAGA.
Over the weekend, with the MAGA gang desperately trying to characterize this kid who murdered Charlie Kirk as anything other than one of them, and doing everything they can to score political points from it. In between the finger pointing, there was grieving. On Friday, the White House flew the flags at half staff, which got some criticism. But on a human level, you can see how hard the president is taking this.
My condolences on the loss of your friend Charlie Kirk. May I ask, sir, personally, how are you holding up over the last...
My trucks.
I think very good. And by the way, right there, you see all the trucks?
My trucks.
They just started construction of the new ballroom
I
for
don't give a fuck about Charlie Kirk.
the White House, which is something they've been trying to get, as you know, for about 150 years. And it's
I won't even put past me if, like, in some way, like, you know what my conspiracy brain is that they're so culted and it's so bad that he probably, Charlie Kirk, you know, in my opinion, volunteered for that. In my freedom of speech, in my opinion. Uh-oh, I might get taken to prison for that, guys. You know, it's not far off in cults and shit to understand that, hey, like, for the bigger, grander picture of, like, what their shit is about, that he's a sacrificial lamb for it. They do that. It's happened over time. The cults, they sacrifice their own, or voluntarily sacrifice their own, or knowingly sacrifice yourself for the thing you think that you're doing.
It's going to be a beauty.
Yes. Okay. He's at the fourth stage of grief, construction. There's demolition, construction. This is not how an adult grieves the murder of someone he called a friend. This is how a 4-year-old mourns a goldfish, okay?
Okay, they're mad. White male, raised in a conservative family, raised in a white conservative state, family, especially his dad, Trump supporters, literally. Where was the problem? Oh, we don't need to, like, rewatch the whole thing again, but that was it? Are they that soft? They're that soft. Look at we're the woke mob now. Look at us. Hey. We're the woke mob. We do that now. That's ours. All right. Well, I'm not going to just sit and doom scroll and look for shootings and stuff. Not going to do that. Trump is in the UK. Oh, Jesus. Yeah. All right. Well, we've been live on Twitch, by the way, the whole time, so you guys can make sure you go follow Twitch again. Twitch is back. So that's an option for you to watch. The man accused of fatally shooting Charlie Kirk in Utah admitted to the killing, saying he had enough of Charlie Kirk's hatred and that he seized the chance to take him out, according to charging documents released on Tuesday. Said he had enough. They're still using McGruff. Night out against crime. They're trying to prevent the National Guard from going to New Orleans because Trump said that he's going to send the Guard out. Dude, when's the last time we've seen Scruff McGruff? Holy. Is he still used? Scruff McGruff, Chicago, Illinois, 60652 or whatever. I remember I had that memorized. I had that memorized as a kid, or however the shit went.
Here's my nephew Scruff, about to run into trouble again.
Hey, Bobo, where's your video game? In here. Well, look at this.
It's a gun!
My dad doesn't want to hold it. What'll I do?
If you get my new comic activity book, More Adventures with Scruff, you'll find out what you can do about bullies and guns. And you'll see lots of games.
Cool.
For your free copy of my new comic activity book, just write Scruff McGruff.
Yeah.
Chicago, Illinois, 60652 to help take a bite out of crime.
I want it. I want it.
I'll take a bite out of crime. This is a new cartoon? What? A new cartoon?
That's Jenny. But that's not Jenny's dad.
Creepy.
If she gets into that car, you may be looking at Jenny for the last time.
Yeah, we need 80s cartoons again. This is what we need to bring back. Just shit that scares the fuck out of you. But like has to do with MAGA. We need this again.
I'm McGruff, the crime dog. Let me show you something. See that playground? A lot of kids there. Every day in this country, 60 kids disappear. Some run away, but a lot are kidnapped by strangers or even by people they know. Almost
yeah, like Epstein.
20,000 kids a year. 20,000 kids, one kid at a time. Maybe your kid, on your street, just like Jenny. You know, your kids can learn to protect themselves against crime at home, at school, on the street. Very nice going, Jenny. She's going to tell her folks about this. And you can write to McGruff. Learn how to keep your family and your community safe and help take a bite out of crime.
Crunch. Take a bite out of crime. Well, they made him less creepy from the 80s and made him different for the 90s. I grew up with this Scruff McGruff. This is the older 80s one. I grew up with this one. McGruff, the crime dog, addresses the national fentanyl crisis. What?
Another teenager, victim to fake pills. That smells like big crime that needs to be stopped. Before buying pills online, think about this. Should buying prescription pills be this easy?
Yeah, bro, I'm picking up. Same guy. I bet. Got you 5.
Oh no. Oh no.
Think these pills are tested and safe?
I bet.
Same ones you get from a doctor?
This is 2020's McGruff now. This is woke McGruff.
You know they're not. Did you know that fake prescription pills may contain fentanyl? And an amount small enough to fit on the tip of a pencil can be lethal.
It's like that house in Ready or Not.
Listen. Before buying pills,
who puts their pills in the mailbox? What is happening?
Social media. Think again. Learn more at McGruff PS.
No, that's the creepy McGruff. There you go. Modern day creepy McGruff. That sucks. Yeah, you thought the 80s one was creepy? How about that one? Oh boy. How many different McGruffs have they tried now? Oh, this is an older one? This looks like an older one. They had skits? What the heck?
Hey, Uncle McGruff, got a minute for your favorite nephew?
You bet, Scruff. Come on in. What can I do for you?
I'm kind of confused about something.
Well, the best thing to do when something's bothering you is to talk about it, just like you're doing now.
Aww. I miss 90s TV and stuff.
Okay, Unc. Here's the thing. Jimmy Allen, a friend of mine, wants me to come over to his house this afternoon before his folks get home. He found a gun in the closet, and he wants to...
Hold it, Scruff. I can tell you right now, that's something you don't want to get involved in.
Yeah.
You shouldn't even touch guns without adult supervision, no matter what the reason. They're just too dangerous.
Yeah, we don't have that message anymore, do we?
But why, Unc? I see guns on TV and in the movies all the time.
That's true. But that's pretend. You know, make-believe.
Let me tell you, guns and kids are a dangerous combination. In fact, let's take a look at my files and find out why gun safety is so important.
The McGruff files. Yeah, good idea.
The McGruff files. We need McGruff to look at the Epstein files.
Wow. Awesome computer, Uncle.
We got to get Scruff McGruff on the case.
You bet. With this, we can find out about all kinds of stuff with just a click on the mouse.
The magic of the internet.
My dog and his friend the mouse. I like that.
Not great, Scruff, but not bad.
So where do we begin, Unc?
Information. That's the key. I want you to know the difference between pretend and real life. Between toy guns and real guns. And what can happen when boys and girls handle firearms. The first thing I want to show you is how TV shows and movies aren't real. They're make-believe. Look here. This video was taken behind the scenes while they were making a TV show.
Oh, hey, it's a shootout, huh?
You mean they're actors pretending to shoot each other. The guns shoot blanks, the blood is fake, and the people who are supposedly shot are in fact never really hurt.
But it seemed so real.
You're right, but it wasn't. It just looked real. The actor pretended to be wounded, just pretended to die. What you see on television and in the movies is make-believe, Scruff. It's not real life.
This is the message that MAGA needs this.
I guess it's important to know the difference, huh?
Right.
You bet. Because in real life, guns are dangerous.
MAGA needs to hear this, except for obviously now it's like the internet, not TVs and movies.
People are injured and even killed by guns. Let me show you the difference between toy guns and real guns. These are toy guns. You know, water rifles, plastic squirt guns, cap pistols.
And I had all of them. I had all of them. I had all of them.
Like real guns.
And they're not dangerous, right?
Well, you never want to point a toy gun at someone because the person may think the gun is real. That could be dangerous because the other person could injure you if they thought you meant to harm them. Otherwise, you're right. Toy guns aren't very dangerous. But real guns, guns that aren't toys, those are a different story. You gotta realize that even something like a BB gun isn't a toy. Watch this.
Wow, a BB gun did that, Uncle McGruff?
It sure did, Scruff. Imagine if the BB had hit someone in the eye.
Oh, no.
And if you
shoot your eye out.
Did some damage, look at this.
Oh, no.
That's what happens when a bullet traveling over 850 feet per second hits something like that.
Wow, 850 feet per second.
You see, when someone shoots a gun, the bullet or BB has one job to do, to make a hole in whatever it hits. If a person had been standing there, the bullet would have made a big hole in them. You know Teresa and Diego, don't you?
Sure, Teresa's a good friend of mine. We saw each other last week over at the playground.
Oh, so you haven't heard about the accident?
Accident? What accident?
Well, it happened in their home. Diego found a gun next to his dad's bed.
Uh-oh.
Diego shouldn't have touched the gun. He knew better. But he went ahead and did it anyway.
Diego, what are you doing? Put that down. It's dangerous. It's not loaded. See?
No, Diego. No, this is a Scruff McGruff thing.
Oh, no, not Teresa. Is she okay?
She's alive, Scruff. And she's lucky to be alive. The bullet hit her in the leg. The doctors say it's going to be a long time before she can walk again. Diego made a big mistake, and it caused his sister a lot of pain and suffering.
Now Teresa and I won't be able to play together, will we?
Not for a long time, Scruff. Not for a long time. And she won't be able to play on the soccer team at school, take part in her term project, or even hang out with her friends like she used to.
Wow. What can kids do to keep themselves from being hurt by a gun?
Let me pull up another file. One about Jamal and his cousin Michael. Ah, here it is. Jamal knows what to do if he comes across a gun. He knows it's important to follow some basic safety rules. And that's just what he did when he and his cousin Michael found a shotgun one afternoon.
Yeah, be like Jamal.
No kidding.
The kid even knew to push the barrel away. What the heck?
Nah, dude. We're not gonna have any fun with that.
Come on. We'll be careful. What could happen?
Do you know if the gun has a safety catch or not?
No.
And even if it did have a safety catch, the gun could still go off.
Exactly.
If it's loaded.
And how do you know if it's loaded?
Mm-hmm.
Do you know how to find out?
No.
See? We don't know anything about guns. And even if we did, we still shouldn't mess with one because they're too dangerous. Besides, our parents told us not to mess with one or even handle one.
Yeah, you're right. They don't want us to get hurt.
My mom's inside and we'll let her take care of it.
Good idea.
Yeah.
Speaking some wisdom. Look at the Indiana Jones and the Last Crusade poster. Holy. Oh, wow.
So what you need to do if you come across a gun is not to touch it. Leave the area right away and get any other children who are nearby to leave with you. Then tell a responsible adult, like a parent, teacher, or law enforcement officer about the gun. And if you're not sure whether a gun is real or if it's a toy, you should treat it like it is real.
Exactly.
And not take any chances.
That makes sense, Uncle McGraw.
None of this is taught to... I mean, the NRA conservatives could pretend that this is how they teach their kids gun safety, but no. They're just giving them unrestricted access to weapons and having them around it all the time, normalizing it. They're not teaching them that, hey, this isn't a toy. You know, but they're out there going to the range like it's a toy now. Ain't respecting the weapon at all or anything.
But what are kids supposed to do when their friends ask them to play with a gun and they won't take no for an answer?
Well, let's take a look at one last McGruff file. This one's about Kendra. Last month, a couple of Kendra's friends asked her to help them settle an argument with another group of kids.
No, but it's really not worth an argument. There won't be an argument. How do you know? Come on, I'll show you. Check this out. My dad had it hidden in the closet. A gun? Yeah. With this, there's no reason to be afraid of anyone. Isn't that right, Jason?
Brings it to school.
Yeah. Right. So, are you gonna come along with us, Kendra?
Kendra was in a tough spot, wasn't she? She knows how dangerous guns are, but she didn't want to go against her friends.
I know how she felt. I'm in the same spot with Jimmy Allen. What'd she do, Unc?
Well, Scruff, you kids have a right to think for yourself. Just because your friends want you to do something
doesn't mean you should
make it right. I mean, if a situation feels wrong, it probably is wrong. Trust yourself and your feelings, and be strong enough to break away from the group if what they're doing doesn't seem okay, because your life is involved, and theirs is too.
That sounds good to me. But what did Kendra do?
Let's find out.
Are you with us or not? No way, Ross.
Hell nah.
Guns are dangerous. Somebody could get hurt or even killed. Oh, what do you know? I know it's wrong to settle an argument with a gun. That's what. And I also know about gun safety. My Uncle Mark taught me all about it.
What about gun safety, Kendra?
Well, for kids our age, it's wrong to even touch a gun. And if we see a gun, we should leave the area and tell a responsible adult. You gonna tell about this? Yeah, I am. 'Cause you're my friends, and I don't want you guys getting hurt. Are you coming with me, Jason?
Yeah. I don't want anything to do with that gun.
Yeah.
Come on, you guys. You guys!
Walks with them.
Come on, you guys. You guys! Okay, you're right. Messing with a gun is pretty stupid.
And dangerous, too. How are you gonna get that back home without your dad finding out?
Hey, why don't we give the gun to my Uncle Mark? He'll know what to do with it, and maybe he can help us explain what's going on to your dad. Well, I guess that would be okay.
Kid's probably got a lot more going on at home, having a gun in his backpack at school.
Way to go, Kendra!
Way to go is right.
W. Kendra.
Touching a gun is bad enough, but using one to settle an argument is against the law, and it could kill someone. It's just plain wrong. Now, let's you and I go talk with your friend Jimmy and his mom and dad about gun safety.
Good idea, Uncle McGruff. I'll make sure he knows that boys and girls shouldn't touch guns. And if we see one, we should leave the area right away. Then we should tell a responsible adult, like a law enforcement officer, teacher, or our parents.
Exactly right. And if every kid does that, we can be much safer, and we can take a bite out of crime.
If this was released now, it would be called woke. That's what's crazy. That's where we're at. That's the messaging. That was the public broadcasting we used to get in America when I was a kid growing up. Those are the messages we got about, but now gun violence is a politics issue now. That message was kids should literally not be around weapons or not around guns. Keep the kids away from guns. And that's like woke now. You can't say that. Oh, you afraid of guns? You scared of guns? It's not the gun that kills a person. It's the mental health. We gotta spend like 8 hours instead of like watching that, and like the message is there. The whole message is right there in that video. We gotta fucking debate perverts and losers from MAGA now and NRA sexuals over everything. Wild. All right. Well, we'll leave it on that then. We'll leave it on a good Scruff McGruff note. I'm going to be live on my gaming channel. You guys can check it out if you guys want to. Mercado Gaming on YouTube. Probably more, I don't know, what is it, Wednesday? Oh, really quick, before we go, we got to do sports quick. We got to do sports. Don't go anywhere. We got to give you guys an update. We didn't last week because of the shootings and just chaos that was taking place, but don't go anywhere quick. I promised you guys I'd tell you guys how the leagues are doing in our Renegades Fantasy Football League. Okay, I told you guys we have 2 leagues, 2 12-person leagues. If you guys are interested next year, because it's already done. Leagues already started. You know, join our Discord server and get connected. But we have 2 12-person leagues going right now. We have the Renegades Blackout League. And this is our current standings. I'm at the top. I mean, you know, it is what it is. I'm at the top with 2-0. Okay, I'm at 89% to make it. Then you got the Green Bull Packers. You got the Green Bull Packers in second place. You got the Insane Underdogs in third. KGS Luxury Squad in fourth. Diabolical Danksters. Then you got the Hammer. Then you got Timmy's Tokers. You got Kylie's Steamboat Blitz. Mrs. Darth Vader. Wake and Baker. And then you got Nell's Bells. And then Anne Marie's Awesome Team rounding out the 12th place. Only the top 8 make the playoffs. Only the top 8 teams make the playoffs at the end of the season, and after 2 weeks is what we got so far. In the Renegades Blackout League, there's the season stats, how many points for, and how many points against. They usually can indicate, you know, if your team is doing well, or even if, like, for example, you know, Steve, I'm going against Steve this week. Steve's 2-0, but he hasn't scored really 200 points yet. So teams he's won against really haven't been the strongest. So we'll see. Also on the flip side, you got freaking DeHammer and KGS down here, and they've lost, but they have more points, or KGS has more points than I do. So it means KGS has a good team. Or even down here, Wake and Baker, you know, MOB's team, You got almost the same amount of points as, but it really won't change until like mid-season where you really see where everybody's at. But this is about where our fantasy football league is right now in the Renegades Blackout League. Here's a projected bracket. The way too early bracket is the way too early one after 2 weeks. And what it's looking like. It's looking like me versus Kylie for 1 versus number 8. And here is the consolation bracket as of today. With Waken Baker, Mrs. Darth Vader, Anne Marie, and Nell in the consolation. Okay, let me see what else we got here. This week's matchups. Like I said, I'm going against the insane underdogs. And it's looking like I have a advantage. I'm going to score 124 points, and Steve's going to score 106, but that changes, obviously. That changes a bit. Here's my team in the league. Lamar Jackson's my quarterback. Josh Jacobs is my running back. Javonte Williams is my other running back. I got Jamar Chase, who he's got a new quarterback behind him, throwing to him now, that Joe Burrow's out. I got Travis Hunter, Sam Laporta, and Amari Hampton. Brandon Aubrey's my kicker, and I got the Rams defense. But I'm going to be, I hope Godwin can go this week, and then I'll put him in over Travis Hunter probably. Or Mari and Hampton, because he hasn't been doing very well. But that's my team in the Blackout League. Okay, we're 2-0, doing well. And there's the standings overall in that league. Okay, we have another one, and I'm doing the opposite in this league now. Now I'm 0-2. I think I'm in last place in this league. I am in last place in this league-ish. No, I'm not. I'm in 9th. But I'm 0-2 with a lot of points scored. A lot more people are scoring in this point. You got 200. Ilex Holly's teams got 271 points. Like, the teams are a little bit more well-balanced in this one based upon the draft and how the draft played out with how teams are. So it's a little bit harder of a league for so far. But you got 4 2-0 teams. You got Ilex Will Fork on a first date. Let me see your TDs, Portsmouth Dreadnoughts, Lou Loff, the Montana Turd Nuggets, which is Tevo's team, Bama Nation, Matthew's Monstrous team. Then there's me at 0-2. Tyrell Corp Replicants. You got the Chuck's House of Cards, and then Boodle's team. Okay, Boodle's team. Now this league is a lot tougher for moves. More people are active in waivers. And the teams are more balanced in this one. But you got, I'm going against Ilex. I'm probably going to lose again. I might go 0-3 in this league to start off the bat. I'm going against Patrick Mahomes, Jonathan Taylor. She's got Alvin Kamara, Malik Neighbors, Zay Flowers, TJ Hawkinson, Jalen Warren, Steelers defense, Jack Bates. And I got Jalen Hurts, who good quarterback, but not really scoring a lot. Jahmyr Gibbs, Javonte Williams, Puka Nacua, Jalen Waddle, Zach Ertz. So I have a good team. I'm just not winning. My team's good. I'm just not winning because a lot of the teams in this league are just ridiculous. I think everyone in this league's at least 120 points ish. Around. Most people are. So then you got this going on. Let's look at the scoring leaders. Well, that's the players. Hold on. The Gold Rush League standings. There you go. Back and forth. So if you guys want to be a part of fantasy football, you better start getting connected with my community. I'm not just going to do it during the stream, especially since we do news most of the time. I don't have time to do community stuff. You got to come to the Discord or the Facebook group, but this was organized on the Facebook or organized on the Discord server. So you can absolutely be a part of that if you would like to. Tavo's team scored the most in the first week. He scored 100 and, or he scored 100 and, where was it? 150 points. Tevo had the most points in both leagues. Wild. Look at his team. Went off. He had Josh Allen, Derrick Henry, Aaron Jones, Garrett Wilson, Jerry Jeudy. Everyone went off for him. Trey McBride. And then week 2 came. And week 2 happened. And then Tevo's team came into reality. But 100-point swing. Oh, boy. You got some changes you got to make. Aaron Jones is on IR. He's done. He's out for 4 weeks. You don't really have you got Kareem Hunt you should put in there. You don't really have any other running backs, Tevo. Raheem Sanders. I don't even know who that is. Is he like the 4th string running back on Cleveland? Okay. So Tevo started out strong. We'll see if he's able to bounce back from that one. He lost his running back. Let's see what else here. Matt, Sean, Holly, Cody, Michael, Matthew, Leeson. Okay. So those are more of the community members. We got Danky and mods. Some of the mods are in this one. More mods are in this one. I'll try to balance it a little better for next season, or at least people that are newer to fantasy football, and make sure like you're not with people that know what they're doing. At least I tried to do that. I tried to make it as fair as possible. There's Kylie's team. Kylie is 1-1 going against Wake and Baker. Kylie has Drake May now. Picked up Drake May. You can probably drop Tyler Bass. Okay. Let me see what else we got going on here. Kylie, you guys know Danky. Mod Danky's team. I beat him in week 1. I beat Danky in week 1. He lost Joe Burrow. Joe Burrow's on IR. He won't be back until maybe the end of the season now. He's got McCaffrey, Pacheco, T. Higgins, Jackson Smith and Jigba, Tucker Kraft, Matthew Golden, Chiefs defense, McManus. So Danky's team's not bad. You got ETN too. ETN would be a good flex, but Golden's been going off. Kind of. But you got ETN over there, Ian Keenan Allen. So Danky's team's good. See what else we got here. The Blackout League. The Hammers team. He lost JJ McCarthy, but picked up Daniel Jones, even though I did too, and you got him over me. And the Packers. You got 2 moves over me. I picked up Packers defense and Daniel Jones, and you got both of them. So there you go. But JJ McCarthy's out, obviously. Daniel Jones is a good quarterback. Though he was on the Vikings last year, which sucks. Because he's going crazy now. You got Mod Ann. Mod Ann drafted a lot of Vikings. Like all of them. She's got Justin Jefferson, TJ Hawkinson, Aaron Jones, Adam Thielen. Josh Allen's her quarterback. Ray Davis. I forgot he's still in the league. Kenneth Gainwell's doing okay. Not as good as Jalen Waddle. Jefferson, obviously. Even Stephon Diggs, ex-Viking. He got Cardi B pregnant, so Cardi B's having Stephon Diggs as kids now. That's happening. What else? Nell. Nell's 0-2. Jalen Hurts, Swift, Mason, which is great. You have Mason because he's now the starter. Anyone who drafted Jordan Mason, that was a huge move. I think he's the better running back anyways. Aaron Jones is a good pass catching running back. Jordan Mason's a better pure running back, like getting yards. Who else you guys would know? MOB's team. You guys see MOB in the chat sometimes. You got a decent team. Just started out rough. I think he lost to the wife right away, and then 140 to 101 to the Green Bowl Packers. Breece Hall hurt. Justin Fields hurt. Breece Hall isn't hurt. It just hurt. Those points hurt. I start CJ Stroud this week, huh? But anyways, that's where we're at, y'all, with our leagues. I told you guys I would update you and people that wanted to know. So there's I'm 2-0. I'm in first place in the Renegades Blackout League personally. And there's our standings overall and where we're at after 2 weeks. And then here is the Gold Rush League. I'm in 4 leagues, but the other 2 aren't our community, so. And I hopefully can bounce back this week, but I'm going against a tough opponent. Going against a real tough opponent. Holly's 2-0. We'll see how we do. I should have won last week, but I had the wrong players in. I didn't have the right play. I didn't have ETN in. Or Waddle. We'll see if Waddle can bounce back. All right. If you guys want to support Mercado Media, consider the Buy Me a Coffee link, or just send support in the chat if you would like to. Don't feel obligated to do so. I'm just glad that you're here. I'm glad that you're here and tune in during the streams. Like I said, we'll be on my gaming channel now. I'm going to get the stream ready. Just continue probably grinding. Probably Arena Breakout. Yeah. Yeah, let's do Arena Breakout again. Since that game just came out, it's free to play. Yeah, let's do that. Arena Breakout. We'll do more 2K this weekend. Spooky season's coming, so we'll do a bunch of horror games coming up. Bunch of Resident Evil stuff. Let me just get this scheduled here. Let's do it for... it's going to be earlier than usual. I don't feel like doing 5 hours of gun violent news today. And just America chaos news. Like, it is what it is. We covered it every day. Nothing's changing, and there'll be likely more news tomorrow, y'all. I need... Whenever there's an opportunity to, like, at least pause for a bit, I'm taking it. Because just the barrage of news that isn't good can be bad for the mental health. So it's not avoidance. It's just, you know, trying to practice some good harm reduction. Good harm reduction on the gaming channel. Tell you what. Well, we're going to be playing Zomboid this weekend, too. So if you guys have Zomboid, I'm going to set up a server with some mods. I just got to research how to do that again because I forgot. But 2K is coming back. Kingdom Come's coming back. Don't worry. If you guys have been enjoying those games. But play a bunch. But we'll do Arena Breakout, which is like a Tarkov game. Tarkov without the Tarkov. Without the developers. Okay, guys? Yeah. You guys are awesome. Thank you so much for watching. Leave a like. Subscribe to the YouTube channel if you haven't done so. Thank you to all the members. Thank you, Sator, there at the end for the 5. I appreciate all your guys' support left and right. Thank you, Amonsky. Thank you, KP. Russell Whiskey said, release the Trumpstein files. LJ Boone said, all I need to know about the Fed is in the Trump is in the Epstein files. Charlie Chuckles said, did you hear about what happened at the homeless encampments in Minneapolis? I have. And then Sator Arepo, thank you for the $4.99. Thank you for the support there on the chat, you guys. Have a good afternoon. Make sure you like, subscribe. Like I said, join the Discord server so you're updated on all streams, breaking news and non-breaking news. I'll see you guys on the next one on the gaming stream. See you there.